Right guys, so following on from our last video of a full top-down analysis, this is my actual chart what I use to mark up all my trades. As you can see, it's a mess, but looking at daily price actions boxed off up until New York Open, this gives us a clear range and a clear idea of how price is behaving that given day before market open. So we can see any sort of manipulation that's happening, any sort of engineered liquidity, any trends, that sort of thing. These are all the trades that I've actually taken over the past week or so. And yeah, so you can see that my support and resistance is marked, my daily box is marked from the start of Asia up until 2:30 or whatever time New York session opens in your country. And you can see the trend lines that I've marked up, and you can see the trades that I've taken. It's basically a mess. But we'll jump on to the other NASDAQ chart. As you can see, the support and resistance is there from last time. I have just boxed off price action. And the pre-start checklist basically is a series of things that we need to see in order for us to trade on any given day. This is very important because it will save you a lot of time sitting on the charts looking for trades when there is no trades there on that day. You're just going to waste your time, waste your funds, blow your accounts, and you're just going to be super stressed out, and over time it's going to burn you out. And believe me, I've been there. So the best thing is to do is just before you start to trade on any given day, identify what the price is doing, what sort of area price is in, what is the market structure telling us in terms of, does it look clean? Is there a clean sense of direction? And is there enough volume or appropriate, sufficient volume to for us to trade successfully? So as you can see here, price just trending in one direction. Then we had some sort of mitigation of this zone, and price just went sideways again and continued. You know, this is real slow price action. New York Open, we're back into the golden zone, and we've had a push away, but there's not enough volume for it to continue. Likewise, price action started off slow, ramped up towards New York. We came down again into the golden zone. All this, don't worry about the golden zone, I'll go through it with you. And price pushed off again, so that would have been another entry right there. This time, enough volume not to take out previous highs, but a sufficient amount of volume to sustain us, 90 pips. 90 points, which is a significant amount. Likewise, very slow price action, resulting in not much happening other than price did eventually go into our zone for a sell, but I'll not be staying up till sort of 7:30 at night waiting for a push to occur at 1 o'clock in the morning. That's not how I roll. I'll pretty much be trading from 2:30 till like 5:30 max, but I want to be in and out before that if possible. So as you can see, it's a low volume day. The candles are small. There's not like any clear ranges. There's not that much happening. So usually when it's small, low volume days like that, either big news affects price, like it did there. Big news event, high volume, big thick candle, and then price will just end up where it's already programmed to go. This is all preempted stuff, guys. As I said before, the banks do not play to lose. They're always playing to win, and us guys are the liquidity which fuel their rockets. That's the way you've got to look at it. And likewise, on this day, we had a big push down in Asia session. Doesn't usually happen, but it's been happening more often than not these days, probably due to the tariffs and whatnot, and whatever Donald Trump tweets overnight or whatever. And it's been a sort of a low volume day again. There's not much going on. We're pretty much trapped between these two levels of support and resistance. As you can see, each one of these days, we've not technically gotten out of this range that we're currently stuck in, which is fine. And I'll tell you, NASDAQ doesn't usually range this much, but it's because we're at all-time highs. There's not much price action, any key levels to go off, other than this is the most recent price action, you see? So price is manufacturing, it's engineering its own sort of levels. So these institutional banks are now key programming in these levels, they're identifying, all these liquidity pools and whatever's going to happen, and they're driving price into those areas, and then they're trading from these areas basically. But we can also capitalize on that once we know and understand what is going on and the overall picture of how things are going to play out. So a quick way we can do that, we've got a indicator here, it's called the VWAP. So we can turn on the VWAP, and this will quickly help us identify whether or not today would be a trading day. Any given day is a trading day. So VWAP stands for volume weighted average price, and you can see that the blue line is the VWAP, and it's highly important because that is the average of volume on any given day. So as you can see, it starts off real tight together, and as the day goes on, it gets wider. And if price is trending below that VWAP, 9 times out of 10, it's going to stay below that VWAP. And we can also use the levels to the extremities of the VWAP, the green levels, as areas of support and resistance. They are dynamic areas, they're not linear. Likewise, the VWAP is also an additional support and resistance level that we can use to call trades in and around our given times. So as you can see, slow price action, very choppy, the VWAP's not very clean, price is up and down and below and above and all this stuff. Don't get caught out, there's no point trading that sort of price action. Likewise, VWAP started off promising, then New York session open, and the VWAP started to close up. The volume got closed out, Likewise here, we have had a big push. Boom, we've had a big bullish push. We've taken out all this liquidity over here. And what did price do? Price came back to our VWAP and it reacted off it several times before continuing to the upside. I'm pretty sure I actually caught that trade because this blue VWAP is a solid marker, providing we have the right rejections, we have the right entry drills, and we know and understand where price is. But I'll come on to that. Also, the next day, low volume day, price is below the VWAP, it's above the VWAP, it's confusing on purpose, the banks already know what's going to happen, bang, takes everybody out in one candle, which is fine. And as we go across, see, there's volume there, but it's not sufficient volume. And then we get to this day, very clean, I believe this was Friday the 11th, very clean price action today. You see, we're gearing up towards New York session, and then we have a big liquidity sweep into our golden zone, which mitigates fair value gap, point of interest, takes out a trend line, respects the VWAP, and then we're pushing away. Bear in mind, this is a 30-second candle. I don't want to get into entry drills and confuse you guys too much. At the minute, we're just trying to learn the markets, understand how important volume is, and understand rough areas or golden zones, value zones, premium zones, whatever you want to call them, where we want price to be in order for us to take a trend. So that was clean, very clean. Targets would have been previous highs, which we got, no bother at all. Likewise today, it started off promising, but obviously this is all-time highs. So we're not expecting much from here because it's never been this high before. We need price to shake out, give us some levels, let us understand kind of what's going on here. And as I said, because it's all-time highs, we need price to be super, super clean for us to enter anything because it's just too risky. Now look at all this mess here. So that, guys, is one way of how we establish whether or not it's a trading day. So that's the VWAP. We're seeing if the volume's there. So now you understand that is a decent volume day. It's not high in comparison to what it used to be like. That is a low volume day. As you can see, it's very tight price action. The VWAP's very close together and there's not much going on there. So that's the first port of call, what we want to be doing, guys. Know and understand the volume for the day. The second thing is understanding market structure and the trend. Is there a clear sense of direction for the day? So we've broke out of this support level, broke out, and now we're using it as resistance, support, resistance, support, resistance. We've then broke out again. So for us to be looking to trade this, we're looking for a rejection from this support level. So it's support level now. And we're looking for continuation longs. Now, it's not very clean to me. It's not to say that it's not going to happen, but price can be very unpredictable and it can do its own thing the majority of the time, which is why I always stress on, unless price has got sufficient volume and we've got a clear sense of direction, and then price is reacting off one of our zones, be it a support area, a POI, a point of interest, a fair value gap, whatever you want to call it, we're not going to enter the trade. So they're the two things. There's also a basic rule of thumb. Now, this isn't by any means 100% accurate. In fact, it's 70% accurate as a rule of thumb. So price on any given day, the day after, will like to come back into the area where 70% of the price action occurred the day before, if that makes sense. So price would always like to revisit a certain area from the day before making its move. Now, it's not quite clear here because price has just been consolidating, but if you look carefully enough, you can see it. So this is a low volume day. We've had a big push down, and the next day, price has come into a zone. I'll just mark this out for clarity. Into this sort of zone, I'd say that 70% of the price action during that day was in that sort of zone there. Right, and then lo and behold, price the following day comes into that zone. But you can use it as a rule of thumb and let you understand that price does 70% of the time come back to the zone where 70% of the previous day's price action took place. It's a rule of thumb. It's not a 100% rule, but it's just another tool that you can use in your arsenal, just keep in the back of your mind as a rough sort of zone. That if price is being forced down a little bit out of your zone into no man's land almost, it could just be mitigating previous day's price action, 70% of price, collecting those orders before doing the big push, before doing its actual move. So there are three things of how we can identify whether or not we're going to be trading on any given day, and a little bit about understanding price behavior and how that works. So tune in for the next video, guys. I'll be going through exactly how we'll be identifying golden zones, value zones, premium zones. We'll be touching on fair value gaps and POIs. It's real simple. No need to get too worried about it and too carried away about it. And we'll go through the Fibonacci levels that we need in order for us to see, for us to take a trade, basically. So there's a few things that need to line up. I'm looking at roughly 5 to 6 confluences before I take a trade. So market structure, clear volume, clear sense of direction, understanding where price is it in a premium zone, are we having a reaction from it, understanding the fib levels. They're the sort of 5-6 checks that I'll be doing, and we'll be going through each and every one of those, guys. But these are the first couple, and the next video I'll go through the remainder. Thank you.